everyone, this is a technical analysis on USDJPY. Let's start with a fundamental overview first. The USD came under renewed pressure last Thursday following an inline US CPI report and surprisingly weak initial jobless claims. The jobless claims data stole the show as initial claims jumped to a new cycle high and the highest level since 2021. On further analysis, the claims data might have been just a blip as it was negatively skewed by an unusually large spike in Texas. Nevertheless, the data kept the weakening labor market narrative intact and therefore solidified the expectations for three rate cuts by year-end. Overall, if one zooms out, the US dollar has been mostly range-bound, even though the dovish bets on the Fed kept weighing on the currency. Part of that could be the fact that the bearish positioning on the dollar could be overstretched and we might be at the peak of the dovish pricing. In fact, if the rate cuts trigger stronger economic activity in the next months, the rate cuts in 2026 could be priced out and support the dollar. Nevertheless, the trend is still skewed to the downside, and we might need strong data to reverse it. On the JPY side, we haven't got meaningful changes in the fundamentals. The yen has been rallying mostly on the back of the dovish expectations for the Fed. For more JPY appreciation, we will need weak US data to increase the dovish bets on the Fed, or a series of higher inflation figures for Japan to price in more rate hikes than currently expected. On Friday, we have the BoJ policy decision, where the central bank is expected to keep interest rates unchanged, and the focus will be on forward guidance and whether the central bank will hint to an imminent rate hike or signal more than two rate hikes priced in by the market by the end of 2026. Now the daily chart. We can see that the USD-JPY pair has remained stuck in the same old range as market participants are now waiting for the FOMC and BoJ decisions. If the price drops to this major trend line, we can expect the buyers to step in with the final risk below the trend line to position for a rally into the 151 handle. The sellers, on the other hand, will look for a break lower to extend the drop into the 140 handle next. On the 4-hour chart, we can see more clearly the range-bound price action that has been going on since the beginning of August. Despite all the dovish catalysts we got for the US dollar, the pair couldn't break free. Traders will likely continue to play this range by buying at support and selling at resistance until we get a breakout on either side. On the 1-hour chart, there's not much else we can glean from this time frame, as the choppy price action in the middle of this range doesn't give clear levels where to lean onto. On an intraday basis, the break above this 147.77 swing level could see the buyers extended the momentum into the 148.50 resistance. These red lines define the average daily range for today. For the upcoming catalyst, tomorrow we get the US retail sales data. On Wednesday we have the FOMC policy announcement. On Thursday we get the latest US jobless claims figures. And on Friday we conclude the week with the Japanese CPI and BoJ policy decision. Keep also an eye on Wall Street Journal Timmy Rouse, as he could signal a 50 bps cut in his Fed preview.